What might happen to Tesla stock in Q4 today? Tesla is confronting a ton of issues, including creation challenges at its Shanghai plant, developing rivalry from EV producers in China. Likewise, gives off an impression of being a substantial concern. You most certainly would have no desire to miss this. One of the significant issues Tesla is confronting today is the developing worry that interest for Tesla vehicles is presently disappearing. Added to that is the tension that the other EV creators are at last getting up to speed to Tesla with regards to request a few Chinese automakers wandering into the EV business. Stand out as bits of gossip went that a portion of the said organizations are comparable to Tesla. It very well may be noticed that in October, Tesla cut costs on the Model 3 and Model Y by however much 9% in China. Switching a pattern of expanding across the business in the midst of indications of mellowing interest on the planet's biggest auto market. The cost cuts simultaneously posted in postings on the EV Monsters China site are the principal purchased Tesla in China in 2022 and came after Tesla started offering restricted impetuses to purchasers who settled on its protection last month. The value cuts likewise followed Tesla's president Elon Musk's remark that a downturn of sorts was in progress in China and Europe, and Tesla said it would miss its vehicle conveyance focus on this year still. Musk let experts know that request major areas of strength for was the ongoing quarter and that he anticipates that Tesla should be downturn versatile. As per the China Vendors Bank Worldwide, Tesla's value cuts underline the developing serious gamble for EV producers in China, with extensive deals projected to slow into 2023. The cost reduces highlight the conceivable cost war, which we have been underscoring since August, said CG. An examiner with CMBI Examiner cautioned that 2023 would carry more rivalry to the EV area, saying it expected to see deals development for EVs and mixtures on a joint premise to dip under 50%. Even last year, Tesla cut costs in China with an end goal to be more serious in the country, while in the US, its biggest market, the EV producer has raised costs over the course of the last year on them. Greater expense of unrefined substances. The U.S. automaker and a few Chinese opponents have climbed costs a few times since the last year in the midst of rising unrefined substance expenses, yet Tesla has consistently changed the costs of its vehicles in China, including decreases reflecting government sponsorships. Tesla told Reuters it was changing costs in accordance with cost limit use. Added Shanghai Gigafactory has improved while the store network stays stable, regardless of the effect on the economy of China's severe coronavirus limitations, prompting lower costs, it said. The beginning cost for the Model 3 car was discounted to 265,900 yuan, 36,007, 0027 US dollars from 279,900 yuan, while that for the Model Y hybrid was sliced to 288,000,900 yuan from 316,900 yuan. The item cost recorded ordered on its Chinese site displayed in accordance with that. Tesla's new cost cuts in China are supposedly bringing about critical scratch-offs for Chinese EV brands. Anyway, conveyances are down month to month. In October, this was significant information for Tesla, as there have been early indications of an interest stoppage for the automaker, including a lot more limited conveyance times. It was whenever Tesla first really pulled an interest switch since those indications of interest dialing back seemed. The move was additionally critical since Tesla just cut costs in China, which is a critical electric vehicle deals. Anyway, specialists caution that Tesla stock ought to prepare for China, as well as duty influence in the Q4. The two closed term gives that could adversely affect Tesla stock costs are the vulnerabilities unfurling in China and the assessment codes. For one, the continuous descent in China against zero coronavirus are seen by a lot of people as a tremendous vulnerability soon for Tesla, since China is both a vital market and a key assembling site for the organization. For a long while, Tesla has turned into the biggest market. Tesla, as far as volume, as far as top line, Tesla's China deals arrived at around one portion of its deals in the US starting around 2021. As far as the main concern, the China market is considerably additional significant pay from China made up about portion of its all-out pre-charge pay as an assembling site. China's bountiful stock of work in modern center like Shanghai has been an enormous draw for Tesla, alongside other American and European automakers. Basically put, China has been a key for Tesla to make items rapidly and efficiently. Anyway, with the descent unfurling and possibly deteriorating, China's job as a vital market and assembling site might stop briefly. For instance, Volkswagen, another automaker that has been depending on China vigorously, recently declared that its China deals deteriorated in 2022, as well as an astounding 14% underneath assumptions in like manner. Specialists feel that Tesla will endure so a lot or a surprisingly more dreadful mishap. As a matter of fact, there are valid justifications that it very well may be more awful for Tesla in light of its exceptional expense treatment in China. Tesla's successful assessment rate for the past quarter is just 8.4%. As of Q3, its powerful duty rates have been quite lower than 10%. As per its structure, 10K Tesla rounded up a sum of $3.6 billion pre-charge profit in Q2, with the duty arrangement of just $346 million, converting into a compelling duty pace of 9.6%. The critical purposes for such low rates are transitory expense motivators, particularly those from China. Tesla partakes in an expense pace of 15% in China, each of the 10% beneath the typical pace of 25%. The dangers are moreover expanded by the way that Tesla's EVs are additionally excluded from China's 10 by expense. It was recently reported that China will exclude Tesla Inc.'s electric vehicles from its buy duty as per the Service of Industry and Data Innovation. This was a concession made In the midst of exchange strains with the US, Tesla sees China as perhaps of its most significant developing business sector, and the exclusion from a 10-buy duty could lessen the expense of purchasing a Tesla by up to 99,000 yuan, 13,900 bucks 82 pennies, as per a post on Tesla's virtual entertainment WeChat account. Anyway, the said tax reduction is set to end in 2023. On the off chance that the expense decrease isn't recharged by 2023, and the duty rates really do flip back to 25%, the expanded taxation rate in China alone would make a huge effect on its net profit, given the size of its China deals. On another note, the Tesla cost cuts in China, as referenced before, were excessively late to affect conveyances. Still, the cost cuts are affecting interest, as per City Examiner Jeff Chung said that they have checked with showrooms and they accept that Tesla's cost slices have prompted critical request undoings. We sense Tesla's new cost cut technique has made a negative overflow impact where a ton of China EV brands requests build up, has experienced huge request retractions, as per our showroom channel checks, expresses Chung. While he didn't by and large name the brands, organizations like NIO and Dexbang are seeing as Tesla's greatest direct rivals in China. In view of the planning of the cost limit at Giga Shanghai, the effect will in all probability be felt in the numbers in November and December. Anyway, Tesla denied the reports that Tesla was deliberately restricting the result of Giga Shanghai in Q4 during its Q3 monetary outcomes on December 1st. An administrative body said Tesla will give programming refreshes for in excess of 435,000 vehicles in China to fix an issue with side marker lights that might in outrageous conditions at any point lead to a crash. The fix, which considers a review, will be given by an over-the-air update. It covers 142,277 Model 3 vehicles and 292,855 Model Ys, as per an assertion by the State Organization for Market Guideline. It can likewise be noticed that Tesla, as of late, reviewed in excess of 80,000 Model S, Model X, and Model S, Model X, and Model 3 vehicles in China for programming and safety belt issues generally. Tesla is presented to three significant dangers in China: first, as its key market; second, as its key assembling site; and third, because of its assessment motivations. Moreover, these dangers could set off other gradually expanding influences not too far off. Specialists accept what is going on at Tesla will essentially affect Tesla's stock in Q4. On a more splendid note, Tesla redesigned its Shanghai plant recently, after which it conveyed 83135 China, made in September, establishing a result standard for the plant since creation started in December 2019 that said Tesla is currently China's third top-of-the-line EV producer after BYD Engine and Zhang Charmling, and is the main unfamiliar player in the main 15 rundown distributed by the China Traveler Vehicle Affiliation. Buy into the channel for more Tesla stock Q4 expectations.